Thursday. This is MyStockScanner Live. We decode the headlines, we simplify the charts, and then we test each and every stock with our three parameters. Is it a quality stock? Does it have an upside? And is the timing right? Hans-Henrik Nielsen and Liam Flavelle are ready. Hans-Henrik, we went on a roller coaster ride yesterday, especially with Zealand Pharma. It feels like the markets are a little bit jiggy. Do you have the same feeling?
Yeah, if you look at it on the surface, it looks fairly calm, but underneath, it's just a turmoil. Everything is going up and down right now, so I agree.
We try to make sense of it all in the next 25 minutes. Liam Flavelle is with us because it's Thursday. That's also because there's Tech Thursday. Liam, you must be out of breath with all the news that's coming out of Las Vegas and the Consumer Electronic Fair out there. There's so much news.
There is a lot of news. Sorting out the sort of the hype from what's actually investable is quite interesting. But I mean, Lego was obviously the most interesting thing in the whole lot.
You keep coming back to Lego. I will say in that sense, there's lots of other news. Maybe it's your short-time memory that should have changed if we can afford it, because memory is becoming super expensive. On the show today, we have plenty of ammunition towards you guys, or for you guys. Questions coming in at FOMO@MyStockScanner.com. We talked about it already. Zealand Pharma on a roller coaster ride. It was 10% down at one point yesterday, came back up, ended the day a little under 2% down. Today, it's about break even. What is going on with that stock? Shape Robotics went bankrupt, but I saw a fresh headline about the company might start up again. How much does that mean to your stock? I'll ask Hans-Henrik in a minute. A question in our forum also in regarding to relocation of commodities. And then we take a look at a couple of stocks from Europe, ISS, because we had a question about it from Hans-Jørgen. And then also about ID Logistics, a little French stock that we talked about yesterday. Why didn't we buy? Are we having FOMO today? You'll get the answer in a bit. And then Tech Thursday, as already mentioned, as CES in Las Vegas, a big deal. Memory is in focus. And we're also talking First Solar when it comes to tech stocks. Is it really a tech stock, or what's going on here? Liam has the answer. Defense stocks rebound after hours when Donald Trump floats a 1.3 trillion dream military. We have a little less for you in number of the day. We have $3.99. But I can go bigger. It's just like Trump almost. I can go bigly. $3.89 trillion. That's two numbers of the day. We'll get to why we have two later on the show. But first, let me take you on a roller coaster ride. There was Zealand Pharma yesterday. The stock really went up and down and came back up again. Hans-Henrik, what is going on with Zealand?
Yeah, that's a good question. First of all, is my sound good now? I could tell that that was a bit bad in the beginning.
A little bit better.
All right, cool. Anyway, we are looking at Zealand. We are not looking at Zealand. We are looking at Zealand here. And it took a hit down yesterday, and no one really got why. It was a bit confusing. And there was something about that when one of these weight loss stocks are going up or have a better result, then another one dips. We saw it with Eli Lilly. It dipped when Novo Nordisk started to market their product. That is basically what we can see. There's also a JP Morgan Health Conference that Zealand Pharma is a part of here on the 14th. That is a bit in focus, but nothing that I really could see should make it dip 10%.
But there is something that they have a slot on that forum where we...
As far as I can tell, they have, yes.
Yeah, so we might get wiser next week. I think it's on the 14th of January that JP Morgan has that conference, and we'll get to see. Hans-Henrik, questions in regard to a stock that, was suspended earlier in the week because they went bankrupt, or was declared bankrupt. I saw a headline yesterday, and that some of our members have done that as well, that the company might resurface. Does that mean anything to the stock that you hold in the company that went bankrupt, or is that just bad luck?
It shouldn't mean anything. When they're restructuring, it's normally they're starting from scratch. I've seen a couple of examples where there is a bit given to former stockholders, shareholders, but people should regard this money as lost.
they are simply lost. We'll keep you posted on the headlines in regards to that company. And there will be more talk about robotics when we get to the Tech Thursday, because they are a big part of that fair in Las Vegas. But first, I'm going to bring you up on a French stock that we had on the show yesterday, Hans-Henrik and I. A little French stock that we were talking about. Is it a buy? And then today we're probably sitting left behind with a little bit of FOMO, thanks to also an email we received at FOMO@MyStockScanner.com from a member saying, shouldn't you have bought that stock?
Yes. Hindsight's a wonderful thing, isn't it? But yeah, we could buy it. It went up 3% yesterday, so yeah, there's lots more in there. If I just go through it very quickly, oh, you actually mispronounced it. I mean, obviously because we do accents on this show, don't we? So
we do.
ID Logistics is what it's called in France.
Okay.
Have a croissant with that, please.
Yeah. Is it a quite? I mean, we came up with it. It's a great company actually, but the quality score is 77. The earnings per share, you can see these golden bars here are going up compared to the historical, which is the white stuff. So we can see it going up in value. The PEG ratio is below 2.5. Probably likely to be a little bit less. That tells us whether the numbers are baked in. But yeah, from a 3-point playbook point of view, the first three bits that I always look at, the quality score, the earnings and the PEG ratio, are all green. So they all look good. So that tells me within a good 15-20 seconds, yes, it's a stock that I'm really interested in looking at. When we look a little bit deeper, there's some red on the board where we can see the returns on capital, the returns on equity and the returns on invested capital are all sort of, yeah, they're not going, they're sort of staying where they are. So that means the company's not really getting any more efficient in how it's actually using the money we give it. The other thing that's a bit of a danger zone that I'd look at a little bit more, I don't think it is a problem. It's more some numbers on the balance sheet don't quite add up correctly. But these two last metrics are debt metrics. So it looks like the company has quite a lot of debt compared to its earnings. But as I say, I've looked into that. It doesn't. It just seems more like a bit of financial wizardry going on there than anything else. So it looks like a pretty sound company. So from a quality point of view, we always want to buy quality, we always want to have decent stock. So that ticks the box there. From a valuation perspective, yeah, this is why I'm not particularly worried about missing out yesterday. We can see that I've set my sort of bear case, the worst case scenario, down to the bottom of where the stock has really bounced over the last year or so. It has gone lower in 2023, but generally it's bouncing around there. You can see it here. And on the green line, the bull case, which is where we think it could go in a perfect world, I've set it to match the two peaks here. It could go higher, you never know. But what this tells us is that we think there's between an 8% and a 42% upside. So we lost 3.5% yesterday. Yesterday they were 45 and 10. Okay, the world's not fallen down, so yeah, we're fine. And then from the third point of our playbook, we can see that we've got greens on the MTI. They measure the momentum. So the stock has just gone into an upward momentum, which you can see sort of tracking up here. It's above this green and the black line and the red line as well. The green line is our 50-day moving average, which is the average of the last 50-day closing prices. The black line is the 200-day moving average, which is a lot slower moving. But those two tend, when you look at it, the stock tends to trend around that, which is mathematically obvious because that's what that does. But when the stock is above the 50-day, we say it's in an uptrend, and that's when we buy, and we stop buying when it falls below that point. So all three questions ticks.
But Liam, the thing is that FOMO is also letting go of stocks where you missed out. And we said in the Danish edition of the show, there's always another French metro coming, which means there's always another stock we can go into if we don't get on board this one.
Yeah, exactly. So yeah, we're 91, actually about
91, 92.
Invested at the moment. So we haven't got an awful lot more cash in our model portfolio to allocate to this. So, yeah, this looks like a good quality company. There are literally hundreds out there that we track that are probably just as good.
And one of them could be a Danish ISS. We had a question from Hans-Jørgen, who wrote us at FOMO@MyStockScanner.com asking us to take a closer look at that one. You could do the same. It's just not me asking questions. You can ask questions as well. So do send us an email. If we don't get to it today, we get to it tomorrow. But Hans-Henrik, ISS, Hans-Jørgen think it's a good buy. He thinks the timing is right. He thinks the quality is there. Is he correct?
Yes, I think he is. And it is one of those annoying stocks that we have talked about getting into a couple of times, but then we lack liquidity and there was a couple of other things and we didn't get into it. That is annoying because it has been going up. We can see a company that have struggled a bit, but we can see it's a quality of 85. We can see that they're getting control on their earnings per share, revenue looking good. Analysts love the stock, has a low PEG ratio, the ratio we talked about in the show yesterday on the Wednesday word. We can see that they have gone positive cash flow, so it basically all ticks out as a reasonable quality stock. The thing is with ISS, let's look at the value chart first. It can be a bit hard to decide where should I put my PE ratio. We are taking earnings per share estimates and multiplying by what PE we think the investors would want to pay for this profit. And there's been some massive holes in the earnings with ISS. But I have chosen the price earning ratios from the system for around 12, 13 here and up towards 19. They're fairly conservative. And with these numbers, we get a reasonably good upside potential. We cannot be certain that will be hit, but it tells us that we can be wrong quite a lot and still make money.
And then the last point that we also talked about in the French stock is the timing. Is that right?
Yeah, and I put hours in here the 2 times we have talked about. It's a good way of tracking when are we considering a stock. And I've considered it these 2 times, and I'm a bit annoyed at myself for not getting into it.
We're annoyed at you too.
Yeah, I know. Yeah. It's the story of my life. But anyway, I would be waiting for a little retracement. It doesn't have to be much, but just a bit down here. We can see it's tracking the 50-day moving average fairly well. So a little retracement here, and I would not rule out getting into ISS.
I will say that since we tip our cap to Hans-Jørgen, who sent us a suggestion to take a closer look at this one.
Definitely.
He was spot on. FOMO@MyStockScanner.com is the email address that you can use. And one of the things that I know a lot of people are looking forward to on Thursday here is Thursday Tech. There's so many things out there that are tech bound, and in that sense that a lot of stocks that are not even tech stocks are really tech stocks. And Liam, let me start with that because you're going to bring up First Solar. And the reason we also bring it up is because it dropped 10% yesterday, but you claim it's a tech stock. Explain yourself, young man.
It's an energy stock at the end of the day, and energy is what's going to decide who wins worldwide in this market, in the AI race that's going on at the moment. In the Tech Thursday, one of the it's a very short sort of article at the end of, or a very short piece at the end of the article, basically because Elon Musk has come out and said what we've been saying for quite a while now, that China's going to win. They've got 10 times electricity available to run AI. So it doesn't matter how inefficient they are, and they will get more and more efficient, but they will be the winners. So that's why First Solar and the other power companies are going to be the winners going forward.
And the drop that it took yesterday, I know, Hans-Henrik, you also had it in the market scan in regards, and both of you can talk to length about that, well, we're not that worried in that sense that the way that we see it going forward is that it might bounce on a specific level right now, but it's also about how it's valued, right?
Yeah, and we've got, and let's look at the level first. This is the level that sort of started creating itself around here. So it's very light color at the moment. The stock stopped going down about that point, so it might go down today, it might go up. If it goes down, we will almost certainly sell, because the one thing that we've in our research on the 3-point playbook, these sort of gaps down very rarely end up with sort of positives for us. They do sometimes, so we tend to stay away from them. We tend to take that as a reason to sell.
And an important thing is we're not getting married to our case here. We like the case. We think it's good value. But if the market goes down, it just tells us that we have missed something and we sell it.
Yeah, the thing that held our fire yesterday is these numbers. So looking at the 3-point playbook, the valuation chart that we've got, in the worst case scenario, if the earnings per share do stack up still, and that's what Jefferies yesterday were questioning, and that's what caused this drop, then there's only a 3% downside to where we are, and there's an 80% upside potentially. So that's what made us wait and see what's going, because the damage had been done. We're already up 33% still, so we wait.
One thing is that we talk about power for tech and AI in that sense, and that's how you segue that. Nicely done. But let's talk about tech, real tech, in that sense that there's so much news coming out of that consumer fair in Las Vegas. We see people on stage with robots, and you're not allowed to talk about Lego here. But what is the major news out of Vegas?
The major news out of Vegas was actually this company, SanDisk. And some other companies as well that came with it, but it's memory. That's the overarching theme that's come out of this. So basically what happened coming into last weekend, or everyone following tech stocks thought there's a massive shortage of memory. We know how short that the memory shortage is, so we've got a quantifiable number. We know that SanDisk and Micron and people like that are going to go up. So we've got a really good handle on this. And then Nvidia came in with their new Rubin chips that have come out, and they've announced something called context memory, which is basically saying at the moment, if you have a chip that's got 120 gigabytes of memory in it, that's all it can understand. That's the most it can understand of your data as it's processing it. It's slightly more complex than that, but that's the basics. What they've done is they've said, well, we're going to put a ton of hard disks very close to the CPU or the GPU, and we're going to have all of your data in there. It could be terabytes of data. And then everyone who thought they got the memory side of things pegged suddenly thought, oh, bugger, that means all the hard disk manufacturers are going to go up as well. And that's when we saw SanDisk go up 25% yesterday, or a couple of days ago. You saw Western Digital go up by about, I think it was 16%. They dropped down by about 8% yesterday. But you also saw Micron, which is one of our favorites, go up at the same time. So what Nvidia have basically done, they've moved the market again by saying there's a massive shortage of memory that's just got even massiver, biglier, if you want to use the terminology. So that's what really has moved the market. It actually shot the Nvidia shares down 2%. So he did nothing for his own sort of company, but all the other companies around him were really good. So, and you had some robots and you had loads of Lego, so it was great.
Yeah, there we go. I'm going to stop both of you. I know that Hans-Henrik really wants to talk about that Tesla was not there showing off their robots, but a bunch, like 60% of the people on the fair are Chinese. But we're not going to let Hans-Henrik go on Elon Musk, because that could take an hour. But we'll.
I did hear, just on that one, I did hear Tesla were going to be there, but they took one of their robo-tuxes there and it just didn't turn up.
Oh. I don't know if that was a dad joke or a taxi joke. I'll let it slide.
I owe you 50.
Yeah, let's go somewhere else. You said bigly, and something happened yesterday. The defense stocks in the US were going down at the same time the European stocks were going up. But then in the aftermarket, Trump came out and said that he wanted to give extra money to the military because he had a dream military. That's a new sentence that he used. $1.5 trillion for military, about 500 billions up. Hans-Henrik, is time running out for investing in defense stocks, or what do you think?
First of all, that military budget needs to go through Congress. I know he would like to decide it himself, but he can't. He cannot find 500 billion extra. And he's a magician, because those 500 billion should come from taxes. And he already spent that 500 billion first on one tax cut, then another tax cut. Then he promised dividend checks, and those money are not to be found. So my little warning to people is, don't follow those, dare I say, insane, the big US defense stocks. They will probably make, if we just take a quick look at CVX, which is one of the oil companies that was pumped due to that Venezuela thing. We went out saying don't run after that hype. That is insane because it's not going to happen. It's a fairy tale. It's a mirage, and it dropped down. I have a feeling we will see the big defense stocks in US pop up and then get down because they're basically too expensive. I have found two very quick. I won't spend a lot of time on it. One of them is Norwegian Kongsberg. That is not something to do with Trump's budget. That has to do with the EU trying to figure out how to get their military up in speed. Really good.
Denmark.
The what?
They've got to defend Denmark and Greenland, haven't they? So
yeah, exactly. So I think we'll end up with an EU army fairly quickly. Anyway, it's a good quality stock. It's cheaply priced, and it just lacks a little bit on the technical side, but it looks really good. If we go to the other side of the Atlantic, we have one that we have been looking at for a while, which is Transdime Group Incorporated here. Really good quality. We have free cash flow that looks good overall. It's a good quality stock. Looking at the valuation here, it is very cheaply priced. So there is some very good upside. The bear case over the next 2 years is at positive 7%. Analysts believe in around 15%. And if we look at this, it actually just popped up through a resistance area here. It's double green and MGI. So if I were going in for a defense stock in US, I would be looking at something like Transdime.
And again, this is not a recommendation to buy the stocks, of course. What you can do is that you can go to our platform, MyStockScanner.com, take a closer look yourself, tweak around the lines. The thing is that even though you're not a member, you can do it for free for the first month, and you get access to all the information that we have. There's learning things in there, lots of things that you can do, and you can learn the system. It doesn't take long. Look out for green, stay away from red. That's normally what we say, and it has nothing to do with politics. I want to say that right away. So we are almost at the end of the show, but I'm going to ask Liam, would you pay $4 for a bag of air?
He would.
Are we talking bagpipes, or are we talking? Yeah.
No, I'll show you the bag of air. Here it is. The thing is that when you play air guitar, if you ever do that, you of course need strings for your air guitar. But since it's an air guitar, you don't really need strings. You need a bag of air from Kiss. They are $4. They have sold thousands and thousands of these. Hans-Henrik and I were discussing, should we build a website there's nothing in and then charge people for it?
We could fire Liam.
No,
I'll just stay skiing.
No, we shouldn't fire Liam at all. We need to move the needle from $3.99 to 3.89 trillion, because that is the second most valuable company in the world. It's no longer Apple, it's Google. Alphabet went up there, Liam, and you see the sky's just the place for Alphabet. They're going to go higher, ain't they?
I think they're going to go higher. And actually, I've questioned for a while why Apple are up there, because they haven't really innovated that much recently. The strength of their iPhone sales is what's keeping them there, and that you got to look at it. Memory, how are they going to manage that?
Definitely no doubt that Alphabet are having momentum at the moment. One of the things that we have on our show every single day is number of the day. We just had two of them, $3.99 for air guitar strings from Kiss, and then $3.89 trillion from Alphabet. Tomorrow, it's Friday, and that means that we have our Friday face-off, where we pit two stocks against each other, symbolized with a bull and a bear. Tomorrow, we're going to go shopping. Because we're going to pit the Swedish shopping platform Boost against the German one called Zalando. Let's see who gets out on top. You'll see that on our show tomorrow. Before we go, I will remind you about our platforms. I will remind you about our email, FOMO@MyStockScanner.com. And then we just had to touch upon some numbers, because finally we get numbers. One thing is earnings, but another thing is job numbers from the US. JOLTS, Hans-Henrik? For people who doesn't know what it is, explain.
Yeah, there were two numbers that were interesting yesterday. There were the JOLTS numbers, which shows how many open jobs are actually available. And we can see that has been going down. And when it goes down, it's normally an indication of the business owners being a bit cautious. They don't want to expand their business and invest a lot in new employees. if we just if we disregard the COVID crash, then the last time it was at this level was under Trump's first trade war. It's kind of, there is a tendency of it's not good business for a country to run a trade war. But anyway, it was 500,000 lower than expected yesterday, which was insane. It's a really bad number. The other number that came yesterday was a so-called ADP number. It's a private organization that collects salary stats, and they are looking at, there was 41,000 jobs created. Again, we see the normal number is 100 to 200, 220,000. We are down in either negative or just above positive right now. Last time we saw it, you won't believe it, it was last time there was a trade war running in United States. So really bad job numbers from yesterday.
And we will be amazed at your search history.
Oh, this is my Wade West.
Non-farm payrolls are coming up tomorrow. Hans-Henrik is gonna comment live on it when we get those numbers, because that is the king number. That's the most important number that you can get on the job search. Remember, guys, that these two guys, Liam Flavelle and Hans-Henrik Nielsen, take your questions, and they do that whether it be on Facebook or in our forum or via email, and they answer almost every single one of them. If we don't get to them on the show, we'll get to it on the show the day after. So do write us. And then tomorrow we will be back in Danish territory at 12 o'clock. And there will be English broadcast again on Tuesday when we are back on air with that. That's today's scan on MyStockScanner Live. Remember, every stock comes down to 3 questions: quality, upside, and timing. Just invest smarter, you'll sleep better, and you'll stress less. Have a perfect Thursday. Happy investing. See you guys.